A wonderful day to you all. Welcome to Nifty Sense. Today we peel back the curtain on a market that seems to be whispering one thing while doing another. While the headlines scream recovery, there is a hidden narrative unfolding beneath the surface of the indices. Why did the market, which was bleeding nearly 1% in the morning, suddenly find its feet? Was it just the economic survey, or is there a silent accumulation happening by the giants of the game? By the end of this deep dive, you'll see the market not as a screen of flickering numbers, but as a living, breathing machine, where every gear shift tells a story of the future. The market breakdown, the physics of wealth. Today's market action was a classic display of mean reversion. Think of the market like a giant rubber band. In the morning, global fears and a sliding rupee stretched that band to its limit, pulling the Nifty down over 180 points. But as the Economic Survey 2025-26 was tabled, it acted like a safety net. The survey projected a GDP growth of 6.8 to 7.2%. In professional terms, this is the structural floor. Just as an architect ensures a building can withstand a storm, the government's projections reassured big institutions that the Indian economy's foundation is solid. This shifted the logic from fear of loss to fear of missing out, FOMO, causing a 1,000-point swing in the Sensex from its intraday low. Closing figures: January 29, 2026. Nifty 50 to 25,418.90, plus 76.15 BTS, plus 0.30%. BSE Sensex, 82,566.37, plus 221.69 PTS, plus 0.27%. Market mood: extreme volatility ending in a V-shaped recovery. Top 10 impactful headlines. Economic survey optimism. GDP growth for FY27 projected at 6.8 to 7.2%. Providing a stable anchor for bulls. Rupee at record low. The INR slipped to an all-time low of 91.96 to 92.00 against the USD, creating a currency headwind. Fed's status quo. The US Fed kept interest rates unchanged, causing a yield ripple that pressured IT stocks. L&T's infrastructure might. L&T reported a 10% revenue jump to 71,450 crore rupees, signaling a massive order execution phase. U.S.-India trade deal economic survey hints at a conclusion of a major trade deal with the U.S. this year. Silver's historic breach. Silver futures crossed the 4 lakh rupees per kilogram mark, signaling a safe haven rotation. AI strategy shift. India's economic survey suggests focusing on applied AI rather than frontier models to save costs. Banking rebound. Private banks, led by Axis and ICICI, staged a late-day recovery, acting as the market's shock absorbers. Geopolitical tensions. Escalating U.S.-Iran tensions kept crude oil prices elevated at $70.11 per barrel. Institutional reversal. FIIs finally turned net buyers after a 15-day selling streak, a major sentiment pivot. Sectoral pulse. The gainers. 1. Metals, plus 3.07%, driven by global demand and Tata Steel's 4.4% rally. 2. Engineering services, plus 10.94%. Absolute outperformance led by infrastructure tailwinds. 3. Private banks, plus 1.00%, reversing early losses to provide the necessary liquidity lift. The losers. Energy, minus 12.06%, facing massive pressure due to volatile crude and global policy shifts. IT, minus 0.80%. dragged down by the Fed's hawkish pause and currency volatility. Auto, minus 0.68%. Laggards like Maruti and M&M weighed down by high input costs and cooling demand. Institutional flows. The footprint. FII, foreign institutional investors, net buyers of 480.26 crore rupees. This is a green flag crossover after 15 days of relentless selling. DII, domestic institutional investors, net buyers of 3,360.59 crore rupees. The domestic engines are firing at full capacity to absorb any global shocks. The currency paradox. Why a weak rupee is a double-edged sword. The rupee hitting 91.95 is like a supply chain tax on anything we import, like oil or electronics, but it's a sales bonus for our exporters. The professional view. We are seeing imported inflation. When the rupee weakens, the cost of bringing energy fuel into the country rises. This is why the energy and auto sectors felt the pinch today. The hedge fund strategy. Strategists are currently looking at export-oriented moats. If a company earns in dollars, like metal exporters or IT, but spends in rupees, their profit margins naturally expand. This is why Tata Steel ignored the currency pain and rallied. It's an export hedge. The Goldilocks survey. building the 2026 narrative. The economic survey called this a Goldilocks moment. In the world of finance, Goldilocks means the porridge is neither too hot, high inflation, nor too cold. Recession. It's just right. The anatomy of 1.7% inflation, low inflation, is like infrastructure maintenance for the economy. It allows the government to spend more on building roads and rails without devaluing the currency further. The FII-DII crossover today's data shows FIIs finally matching the DIIs' pace. This is an institutional footprint that suggests the price floor has been established. When both the local whale DII and the global shark FII start eating at the same table, it's a signal of structural strength. Green flag deep dive. Two potential powerhouses. 1. Tata Steel, the industrial backbone. Tata Steel surged over 4.4% today. Value moat. Think of Tata Steel like a general contractor for a growing city. The economic survey's focus on infrastructure and the rebound in global metal prices means their order book is becoming more valuable by the hour. Institutional footprint. We are seeing relative strength here. While the index was struggling, Tata Steel hit 52-week highs. When a stock ignores a falling index, it usually means smart money is building a floor. 2. Larsen & Toubro, the nation builder, L&T, was the primary driver for the Sensex today, ending nearly 3.7% higher. Value moat. L&T is essentially a business insurance for the Indian economy. Their Q3 revenue of 71,450 crore rupees proves they aren't just getting orders, they are converting them into cash. Management commentary. The focus on high-margin execution and the pickup in private CapEx, capital expenditure, makes this a textbook accumulation zone candidate for long-term players. The shadow activity, decoding dark pool and block deal footprints. While the retail public watches the flickering numbers on the main exchange, the real war for value often happens in the shadows, specifically through block deals and dark pools. Think of a dark pool like a private VIP lounge in a massive stadium. The big players, like pension funds or global hedge funds, trade massive volumes of shares there so they don't cause a stampede, price spike in the open market. Today we observed a massive spike in delivery percentages in heavyweights like Larsen & Toubro and Axis Bank. When the delivery percentage is high, often above 50 to 60%, it means the buyers aren't just day trading or renting the stock, they are owning it. They are taking those shares home and locking them in a vault. The professional insight. We saw a rejection of lower levels. Early in the session, as Nifty dipped toward 25,150, massive buy orders were absorbed without the price falling further. This is what we call institutional absorption. Imagine a giant sponge soaking up every drop of water. The water here is the panic selling by smaller traders, and the sponge is the deep-pocketed institution waiting at a specific price point. This shadow strength suggests that despite the global volatility and the record low rupee, the big money has identified a value floor. They aren't waiting for the budget. They are positioning before it, quietly filling their warehouses while the noise of the headlines keeps the general public hesitant. The dark horse, aerospace and defense. Despite the broader index appearing red for most of the day, the aerospace and defense sector showed quiet accumulation, plus 0.65%. With companies like RVNL winning 1,201 crore rupees projects and Quadrant Future Tech bagging Kavach safety orders, the institutional footprint is moving towards safety and sovereign-backed contracts. This sector is the fortress of the portfolio. It doesn't care about consumer sentiment, it cares about national security and infrastructure. The core lesson. Today's lesson is about resilience versus noise. The rupee hitting 92 and the Fed being hawkish is noise. The economic survey's 7% growth projection and FIIs turning buyers is the signal. In the world of wealth preservation, you don't chase the candle, you track the fuel. The fuel today was the massive DII support. Always look for where the institutional footprint is heaviest, when the structural weakness of the index is being tested. Stay disciplined. Stay analytical.